It seems that the entire metals complex is at risk of collapse. Gold's already down 20% from its highs. Silver's down 40%. Copper is down 11%. What's next? Are we about to see an end to this commodity supercycle that so many guests on my show have been talking about? Well, our next guest says, wait a minute, this extends beyond just metals. He's going to give us his outlook for the entire commodity complex, especially what's next after the Strait of Hormuz closure, which has affected not just oil. We're here now with Ian Harris, CEO of Carbon Giant. Welcome back, Ian. Good to see you.
Yeah, David, I always enjoy these conversations, so I look forward to. There's so much stuff going on today. How do we absorb it? How does this play out?
Well, let me just start with this few pieces of news that may interest you or prompt you to begin. The Philippines just declared a state of national energy emergency. The New Zealand government just announced that up to 150,000 families in New Zealand will receive weekly cash payments to help them absorb the price of gas. Australia and New Zealand are looking for new routes for oil as we speak. India is doing the same. China has stopped shipping oil inventories to safeguard their domestic inventories. The Strait of Hormuz affects Asia mostly, which is, by the way, most of the world, because 80% of oil coming through the Strait of Hormuz goes to Asia. But it's not just oil, like I mentioned in the introduction, that's affected. I was reading also helium is needed for semiconductor manufacturing. Taiwan bought 69% of its helium in 2025. South Korea as well. More than half of South Korea's helium comes from the GCC countries. This is significant because Taiwan and South Korea are major manufacturers of semiconductor chips. And so the entire semiconductor chip industry, which we know is needed for all our electronics and cars, by the way, is now at risk. What is the most, I guess, alarming fact that you've discovered in the last week? I've just jotted down a few that came to my desk.
So for me, the biggest thing is the sensitivity the world has because we have been optimized on a globalized world, right? So we've talked about this concept before where everybody is just worried about their little box. The inputs will come in. We don't worry about that. We worry about our little box. And that means that the optimization has been made on very, very tight assumptions. And then when things go awry, at the same time where we were already concerned about scarcity of, the whole concept of critical minerals started coming out over the last, 5 years. And this discussion only started recently. And so at the same time, you have a decoupling of the globalization, you have an event like this that shows what can happen. Now, obviously, that is now when we're talking about oil has gone into the concerns over recession, right?
Yeah.
That there will be a slowdown of the world's economies. And I think that's what we see playing out in the metal space, right? We're in the midst of a super cycle. This is not the end of the super cycle, but because of that, you had a lot of speculation has entered into the market, which has accelerated those prices. And those are very sensitive to small short-term changes. It doesn't change the long-term narrative, right? The cupboard is still dry, even if there's kind of a block up going on in what's happening on the planet right now. I think it's only more indicative of the longer-term problem that we have.
What is a longer-term problem?
The longer-term problem is so we've built a globalized world, again, that nobody worried about the inputs into their production chain, and now they're going, scarcity is coming. There's not enough. There's not enough copper. When I'm talking about the industrial metals, right? The gold, silver is kind of a mix between the two stories. Gold is more. There's too much debt. Like this is not sustainable. And adding $200 billion or whatever the number is for Iran spent for so far is only making that problem worse in the long term. And so when you say, I am now worried, I call it, what we can associate to is what happened with toilet paper during the COVID period, right? There was a concern over where there's not enough toilet paper. Everybody started stockpiling it. They started worrying about, I don't care about my neighbor where he gets his toilet paper. I worry about where I'm getting my toilet paper. And so
Yeah.
we're going through that right now, and tariffs are a part of US's solution to incentivize production chain creation in the United States. That is all going on at the same time. So these are what this is the dynamic because there's just not enough supply, right? There's enough supply today, but when we run out of copper or there's not enough copper, the impacts are huge, right? I would still argue the biggest elephant in the room is still oil, but copper is the number two right behind it, and it's just showing you what can happen when there's disruptions to supply.
A lot of the copper is produced in South America where your company's based. So it makes sense that the Strait of Hormuz closure doesn't directly impact, I guess, critical mineral supply. But a lot of the copper is refined in China. So a disruption in China's supply chain may impact the rest of the world. But that's not currently what's happening. I've been on a personal journey this week, Ian, to discover or find out what's been moving gold. And all sorts of reasons have been proposed to me on my show. This is the price of copper, but I'm going to overlay it with gold. Now, this is just very interesting, and I'd like to get your perspective on why that is. When examining why copper or gold have been moving, you look at other variables like the dollar index, and you look at inflation expectations, and you look at the 10-year Treasury yield, all of which have played some role in moving gold. But people say, well, gold's been overbought. The Treasury yield's moving up. The dollar's been moving up. Okay, there are explainers for why gold has perhaps dropped. How do you explain the fact that gold and copper both moved at the same time? And you can't say that the copper price has fallen because the DXY index rose or inflation expectations rose, right? It's just that if you just look at this chart in front of me, Ian, gold and copper and silver and other metals are just moving exactly together ever since the beginning of February. How do you explain this?
So the move up, right, was that I always try and convert the story into the short-term drivers and the long-term drivers. And the long-term narrative, whether it was excessive debt and fiat currencies or the concern over future supply of copper or, and silver, a mix of both of those long-term drivers started to be priced in. But it's priced in by speculation, right? So when you have something that disrupts the speculative buy, right, then everything falls, right? This is quicker money. This is faster money trying to take advantage of an expected gain or loss within those categories. So when we have something come back as disruptive as what's going on in Iran, people are, the new whale in the room is a short-term whale, right? It's what is going to happen to the world's economies, right? So gold is a hedge to inflation from too much debt, but not from commodity prices rising, right? Copper is sensitive in the short term under the current narrative, right? I don't believe that Dr. Copper is just Dr. Copper anymore, right? It still has the long-term structural problems are still in place. But that short-term narrative starts entering into the speculative buy, right? They are trying to anticipate what's going to happen price in the short term, even if it's driven by long-term factors. So that same short-term factor has hit everything, right? And it's converted, and that is why they're moving in tandem right now. You saw they weren't moving in tandem per se at the beginning of the year.
That's right.
It's the short-term factors, and really it started getting shaky when we saw the AI bubble, whatever you want to call it, the tech stock, little bit of a rumble there, and then everybody was a little bit more on pins and needles. So Iran was just the tipping point.
If you could summarize it in a few sentences, has the beginning of what some people say a longer protracted war in the Middle East, but let's just frame it exactly as it is, which is, has the Iran conflict, which started in February, late February, has that changed any of the drivers for copper?
Yeah, I just don't think so. I just
Okay.
don't think that I mean, I like saying today the warehouses are full, but the pipeline is dry. Right? I mean, it's the toilet paper moment, right? The stockpiles have grown as a concern over what happens when there is not enough supply, right? The exact same human instinct also happens on a national level. So we saw this drive, and now they're going, uh-oh. What am I going to do with all this? I got tons of toilet paper. I'm okay for a little bit. So, um, let's go back and look and say what's actually going on outside, because that long-term structural problem is not going away by even this. If this becomes somewhat protracted, the numbers are so big and so concerning that over the long term, it's not going to have a huge impact, in my opinion, right? Because it takes 17 years to build a copper mine, right? And we're talking about things that are happening over months. So you just cannot incentivize quick enough new demand.
Have investors shared new concerns or, I guess, interests to you in particular, CEO of a critical mineral company, since the Iran war broke out?
No, I don't think there's anything specific that's happened because that has happened. I do think, though, that and it started a while ago. There just became much more interest and concern, or either from investors trying to say, "Hey, this is going to be a problem," and we see that pricing into copper. What I find interesting, how resilient copper price has been despite concerns. So that long-term narrative is still out there, right?
Yeah.
It's still being priced in. What I'm seeing, interestingly, is more national interest, right? We've seen it personally, from major mining companies, even mid-tier mining companies, always paying attention very closely. But now we're seeing it on a national level. So I think, as a minimum, this could bring things more to the forefront, right? It only re-emphasizes the risks of a highly globalized world where we depend on supply coming from very limited areas, right? And in copper, 90% of the smelting capacity built, I think it's the last 10 years, maybe 20 years, has all been China. So we've just handed it over, and just said, well, they'll always provide it. But then the second they go, what happens when there's not enough copper? They are shown in other metals, antimony and others, for example, that we're going to protect our domestic production chains before worrying about yours. And that's when things start really becoming concerning.
I'm going to show this chart on the screen. This is oil and copper overlaid with each other. And this is a longer term chart going back to 2018. Short-term gyrations exist and they don't always follow each other in the short term, but in the long term, they've tended to move together. And this makes sense because oil goes up when there's more demand, when there's economic growth, and so does copper for different reasons, but the underlying demand fundamentals for economic growth drive both commodities. And so what we see now is a divergence, complete divergence. Copper is the blue line, and WTI oil is spot price is the bar chart here. And of course, oil has spiked while copper's gone the other way. Sooner or later, these alligator jaws close. Maybe copper is signaling that this oil spike is only temporary. Maybe that's what the markets are telling us. What do you think?
I think it's a difference between a price increase in oil due to economic growth
That's
versus
right.
supply constraint
Yeah.
versus supply constraint. So when you have supply constraint, the high price in oil brings up the concern of the impact on world economies, and that is where you see the speculation coming off,
Hmm.
right? And that the short term factors are the ones that are pulling more on the overall price. That's the way I read it.
Another interesting kind of trend here. 2022 has seen the top in oil, the then top in oil, and then oil has become cheaper in the last couple of years, while copper has kind of gone the other way. Perhaps signaling more economic growth, but perhaps copper is just becoming scarcer and more difficult to mine and more in higher demand, whereas oil has had a fracking boom and all sorts of ways that OPEC can increase production, but not so much for copper. And at a certain point, this is going to get out of hand, Ian. If copper supply doesn't pick up, we could be in a lot of trouble. By we, I mean society. So I think I've asked you this before, but what do we do about this situation here?
So I think that we need to stockpile the toilet paper, right? I mean, it's that simple. It's going to take a long time before we can incentivize new demand, right? Sorry, new supply. Because, what you're seeing in the chart is that historically copper has been always called Dr. Copper because 90% of world copper usage was in electrification. Then along came the energy transition, electric vehicles, sustainable energy, all of this stuff. And I thought, this is going to be an interesting new layer. I think that the forecasts were aggressive, right? This is what we need to do in order to solve the problem, but there wasn't the political will to actually solve the problems. So we could always, throttle back the expectations over time. The new layer that is coming on top of it is data centers and AI, right? I mean, it's Friedland summarizes it so well, right? If your drone can kill me a nanosecond quicker than mine can, that's a problem, right? So everybody wants to, from a national security level, to the existence of certain tech companies is based on the quality of their data centers and their AI, and that's a number that I remember I did the first tweet about this probably about 2 years ago, where I saw it. It was only about 1%, but I knew that every time a forecast came out, that number would only get higher because, David, if you have an AI and yours is better than mine, and I've got my system, then I have to go faster. I have to find a way to do it better to catch up, right? Nobody can fall behind in that overall race. So it's something that just will accelerate over time.
But there's something that clicked. Sorry, go ahead, please.
No, you go ahead.
Something clicked in the metals market in 2025. And I'll pull up silver as an example. I bring this up because we're talking about a deficit for copper ahead, which very few people will refute. But silver has also been in a structural deficit for years, according to reports published by the Silver Institute, World Silver Institute. And so, but this deficit hasn't really translated to higher prices until 2025. Similar with copper. And my question is, what happened in the last year that finally made investment demand click?
I think it's a couple of things, right? First of all, the old adage, follow the money, right? If you're making more money in something else, you're not going to speculate in silver price, even if you believe the overall narrative, right? I mean, it's just that simple. While cryptos and tech and the overall market is bullish, you're making way more money investing in Google or whoever than speculating in metals prices, right? So, I mean, remember, metals markets are not to balance supply and demand as they are to reduce price, right? They are meant literally to reduce price. So until speculation comes in, the price doesn't really start moving until it hits the fan, right? Until you actually, I mean, it doesn't matter if it takes 20 years to build a mine, the price won't go up without speculation entering into it until you have a physical deficit. Now, the massive difference between silver and copper, and the reason why you're seeing a much more concerned response, I think, in copper when we're still currently in a surplus, right? Now, some of the banks have said 2026 and have anticipated a deficit. I don't know if the models will change based on the impact of what's going on in Iran, but most have said, but it's going to happen in 2027. Something is going to happen in 2026. And already we see the acceleration in the price. Why didn't that happen in silver? Because the above ground inventories, even in the LME, were 1 billion ounces. That's the world supply of silver for an entire year. So there's a lot more inventory that can help manage a long-term supply-demand deficit. So until we saw in November, right? Where, we've got a major problem in actually physical delivery of our contracts that
Hmm.
opened up. And I think once people started, the money started flowing. And they started looking at all the different, gold, it's the fiat currencies and the debt problem, 5 years of supply demand deficit in the silver space. Copper's going to hit the same thing. Right now, I think we're sitting on 1.1 or 1.2 million tons of inventory. It's the highest inventories we've seen in copper since I think 2009 or 19.
Yeah.
Anyways, a long time. And why is it such a knee-jerk reaction? Because that's still only 14 days. That's 14 days of the world's demand of copper. And a major difference. If you cannot deliver physical silver, what is the overall impact, right? While there's a little bit of silver used in everything, and 60% of it is used in industrial demand, some robotics, et cetera. The big one in the room is solar panels. So, okay, we're not going to make solar panels. Whatever.
Hmm.
If you don't have copper, you're not transmitting electrons, right? You're not electrifying, right? You're not advancing in an AI. You're not, and here's the big one. I mean, if you look at what's happening, why did Tesla all of a sudden go, well, we're not going to worry about cars anymore. We're going to make robots, right? Because BYD is kicking the living crap out of them. And if you don't have enough copper, guess what? They're going to go into the BYDs and they're not going to go into the Teslas. And that's all playing out. I think they put up their hands and said, we can't win this battle. This is a battle we cannot win. And that's what's playing out, right? You cannot have a deficit in copper without having significant impacts on growth. And on top of it, now you have the strategic national strategy for both individual tech companies and nations. And that is being priced in.
How much is recycling going to fix the issue or help?
I think you look at everything,
with the deficit,
right?
yeah.
If you go, okay, it takes 17 years to build a new copper mine. I'm just making it up. That's actually the number
Sure.
from average discovery until production. But it takes a long time, right? What can we do as a buffer, right? You can increase inventories is the obvious one, and that's one of the reasons why the inventories are so high. Whether it's a hedge to tariffs, but that might be the reason. I mean, that's kind of the reason they made the tariffs.
Mm-hmm.
But the second one is, okay, we can increase recycling, but it's limited. You're not going to tear down the building you're in or the buildings behind you to recycle the copper, right? So it's basically more on a United States exports its copper, so recycled copper, a lot of it. Right. So instead of exporting it, maybe we try and do it at home. The difference is, it's very manual, right? So it just costs too much to recycle. So I think it would have a limited impact over. It will obviously be a buffer in this, but the buffers aren't big enough to face the types of deficits that are anticipated.
Help us understand what you said earlier. It takes 17 years roughly from discovery to production. For those of us who aren't geologists watching at home, help us understand why it takes 17 years. Just for context here, and this is a complete apples to oranges comparison, I know, but the Burj Khalifa, the world's tallest building in Dubai, was completed in 6 years. Why does a mine take 17 years to put into development?
Okay, that's an average. It doesn't mean you can't do it faster,
sure,
right? But at the end of the day, you have to discover it. And that's a big problem by itself. That is a big part of the problem, right? If you're not making a lot of discoveries, people aren't going to be putting their budgets into exploration because you just don't get the bang for the buck. But it is first you got to drill it out, and you got to take it to inferred, and then you got to take it to indicated, and you got to take it to measured, and then you got to do the engineering, and you got to do the PEA, and then you got to do the PFS, and you got to do the FS, and then you got to do the permit. So permitting has been the one that just keeps extending, but it's not just the permitting; it's all the work that has to be done. The other thing that's happened is we've had, I think it's actually 40%, but call it 50% decrease of average grades over the last 15 years, right? The average grade of a copper mine. So what does that mean for you and I? Like, okay, who cares? No, it means that you need twice as much rock to produce the same amount of copper. So you have to do twice as much work in exploration to actually get the same amount of pounds. You have to do more work to find the same amount of pounds. So I do believe that we can reduce the permitting timelines, and there will be nations will be incentivized. We see that happening in the United States, for example, and other places, but it's only part of the problem. It just takes a long time we've only really saw 6 big copper mines built over the last 10 years, right? These are big multi-billion-dollar projects. Right. And so what's happened is it's also full of risk. What happens in Pascalama when you've spent billions of dollars on a project and then all of a sudden you can't get it built? Right. You have a permit problem or something happens and you just can't get it built. Right. So companies don't want to take those kind of risks. So they stop taking them. They focused on brownfields expansions over years and years and years as the path of least resistance to growth, even if it costs more. That's why we've seen in the major mining companies consolidation, because it's easier to buy your production than it is to build new production. Now we're kind of seeing it, but look, Antamina just talked about a $2 billion expansion for 70,000 tons of copper a year extra. That's all you get. There's no way that a greenfields project, a decent greenfields project, would cost you $2 billion to create 70,000 tons of copper a year. It's because they're still extremely risk adverse. So until the copper price gets high enough to incentivize it, it's just not going to happen. And it's nowhere close.
Do shortages typically mean, and I'm forward looking here, would it potentially mean more consolidation or higher frequency of consolidation? If I were senior producer and I'm on a time crunch, because either the government or just society at large is putting a pressure on me to go find more copper, I don't want to start the process myself and just redo the 17-year process as an average, right? I'd rather buy up a company that's already 10 years into the process.
Okay, so first of all, these big companies, CEOs, they normally follow the path of least risk. Right? Nobody is interested in buying and assuming the risk, spending billions of dollars and failing and then costing yourself a job. Right? So until they're forced to do it, they won't do it. Right? That's why consolidation is, if you say, look, we're producing more copper than ever. Right? Then it's easier just to merge or acquire producers. But eventually you're going to run out of it, right? Like there's just not enough, there's nothing left. So what happens is it starts going down the risk chain where they're willing to accept more risk. It's sort of like musical chairs. And that's what's happening in copper, right? It's because it's going to get really interesting because there's just not projects. They're just not there. So if you have 10 companies, but only 4 projects, it's sort of like musical chairs. You don't want to do it now because you're assuming the risk that could get you fired if it doesn't work out. But you can't be the guy who's left with no chair, right? Then what do you do? How do you respond to shareholders who want to see growth? And for investors who are thinking about what does this mean for overall equities, I was actually kind of surprised. I did a little bit of research, right? But today, it is anticipated that for the major diversified mining companies, 35% of their EBITDA is based on copper, right? So it's already a big chunk of where they see the future growth is going to come from, right? It's the most compelling long-term story from a supply-demand perspective. So it is something that it's going to be worth for people to understand more because it's Frank Schuster always says, don't buy what the government tells you to buy what the government buys, right? And so what are major mining companies buying? They're worried about copper, right? Antamina is doing this big greenfields expansion. BHP did a $4.3 billion silver stream to be able to focus more on copper. Gold companies are buying copper projects. Copper companies are merging and amalgamating because they want to have more exposure to copper. So they're all focusing on it, and they have a little bit longer term vision. So again, I like saying, inventories are full, but the pipeline is dry, and that is going to play out over time.
And by the way, I started the interview by talking about how metals are falling. Just for context here, this is a long-term chart of copper. Copper is still at all-time highs. Yes, it's down 11% from its highs, but that was a historic, unprecedented high. So it's not like the price has collapsed to pre-2008 levels. This is just my own commentary. I just worry about inflation once copper gets to a level where it feeds into everything else that we consume: electronics, houses, real estate, construction, everything that needs copper. If the input cost goes up, so does the end product, right? So I don't know. Does this, at what point does it start becoming a concern, I guess, for the consumer? Nobody knows, but let's just discuss that.
It's same as oil. Oil is the number one, the direct, oil goes up, it hits families' pockets, right? But copper is the one that's the growing story. So as copper also influences a lot of the end products that people buy. So it's something to take very much into concern. And it's one of the reasons why also we haven't been incentivizing new supply, because you don't know, a politician goes, hey, we're going to run out of copper in 5 years. And they're like, well, I only have 2 years left in my term. Like,
Yeah.
I don't want copper price to go up. Nobody wants copper price to go up except for copper investors and copper miners,
Hmm.
right? But the problem is, to solve it when it does become a problem, it takes such a long time. So you started the conversation, is the super cycle dead? I think you can look at that chart and go, I don't think so, right?
Right.
It might be a correction. And what happens normally is speculation comes in. Speculation can be, is more short-term focused on how the volatility of it works. But the overall trend there is extremely, extremely compelling, because we
And
haven't solved the structural problems that caused it in the first place. Those have not been fixed, which are, basic supply and demand.
yeah, and people forget about some other potential drivers as well. I think we've talked about AI and data centers a lot on my show, and the electrification of our economy, but we're living in an advanced economy. Take a look at what happened in the 2000s. China went through an industrial revolution of its own, and that blew up the demand for copper by the order of 400% in a span of 5 years. India potentially is next. The entire frontier market of Africa is coming up in the next couple of decades. Africa is going to be the most populous region on Earth by the middle of the century, as projected by the UN. These regions need copper as they advance and industrialize. So
Yeah.
this is a multi-decade
There's
trend.
another
Yeah.
way of saying it. There's another way of saying it. They don't, if they don't electrify. Right. And I
That's
think a
right.
lot of people have seen, electrical capacity versus median household income. Right.
Hmm.
It basically means you do not grow if you cannot electrify. So even under a lot of the anticipation, I see it, 60% of all copper, even in the future, will
Yeah.
be for electrification. The part they don't tell you is 90% today is electrification, right? So you're not making that 90% go away. You're just putting layers on top of it. And you're right. China, you saw that first. I remember living through it, and the Corriente project at that time, when it was just based on 1 billion people going from poverty to middle class, right? You still have a large percentage of the population in India and other developing nations that they are dependent on electrification, and then layered on top of it is the future, where the
Right.
future is going. It's
Well,
data centers, AI, and the energy transition are all layered on top of that.
behind you is a sign called Copper Giant, and that's the name of your company. And I wonder why it's called Copper Giant. How does this company fit into the grander vision that you have for the world, which is more copper demand, more electrification? How does Copper Giant fit? How does it become a giant here?
So the story is, a lot of junior mining companies are focused on exploration or resource development, or et cetera, et cetera. Where I'm a mining engineer, my background, specifically, was at Corriente Resources in the Mirador project, and seeing one of the 6 big copper mines built over the last 10 years, and the first in the history of Ecuador. Ernie Mast was the CEO of Cobre Panama, as a director of the company, for example. And then on top of it, you now have the largest investor is Frank Giustra, that is fairly visionary and saw, basically knows where things are going, and the need for copper. So you say, okay, big mining companies or even nations, they don't want to build 40 mines, right? They want to build a few really big ones, right? Just what happened over the last 6 years. We built six of them. The difference is we need 24 of them on the same scale to supply the anticipated demand. So you wanted big. And so we were looking for areas we know, right? I was in Ecuador, Ernie was in Panama. The new discoveries are going north as we continue to find discoveries, and we believe that that's what we had at the Macoa project in Colombia. There are very, very, very few billion ton plus projects on the planet that are near surface. So we said, this thing could be very big, and that is what the world needs. And it will be very coveted when that goes down the line. And we already see the musical chairs are moving. Like the blinking moments already happened, right? There was at the beginning of the year, I know of six. It doesn't mean they're the only 6 billion ton plus projects near surface on the planet. And guess what? That knot is already tied up. But Alta went to Fortescue, and then about a month ago, we had Hudbay by Sonora Copper, and they're two are off the list. So they're already moving down. Those acquisitions and M&A are already starting to happen. So we knew the value of the project we would have, and now we're advancing it towards a PEA. We're moving it we passed 1 billion tons. We're going to continue to expand it, testing some new targets around it to show that kind of generational style setup that it makes it even more interesting, and moving to put the economics around it. Because we also said we have strong infrastructure. We're not at high elevation. We're not some remote project. We don't need desalination plants. We have power lines. We have roads. We have ports. We have the structural advantages of working in Colombia. And these will all really, really, really come out when we put the economics around it, right? When you can have the PNAV, right? We know, I'm a mining engineer. I have a good idea where it's coming out, and it will be way higher than we are today if it continues the trend. So we know the quality of the project we have, and we'll be able to continue to create value as it moves forward as one of the few coveted near surface, large scale copper projects available on the planet.
Well, let's finish off on this news update here. On the 16th of March, we have a new intersect. Tell us about this drilling update.
Yeah, so unfortunately, we're still in a market that loves amazing intersects, big things. It doesn't matter if they're 800 meters underground. But for us, this was big news. We started in November. We put out a new resource. We passed the 1 billion ton mark, and we came out and we're saying we're doing an 80% increase in drilling than we did last year. We're going bigger, focused on moving towards that PEA, that preliminary economic assessment, and had some major goals. First, when we did the resource and you look at the shape of it, there's holes within it where we don't have any drilling. Just think of it as low-lying fruit, easy ways to pick up easy tons. And so if you look at this intersect, saying 257 meters at a 0.63, that was in an area that in our resource model showed nothing. It was blank. It was zero. It was waste. It was nothing. And, that's higher than our average grade. So this was a big, big deal. We said, we're going to be doing this. We're also bringing in very exciting, bringing in directional drilling. We've already started the first holes of directional drilling where you have a mother hole and then you can come off with daughter holes to efficiently fill out the system. So that was big news in saying, we've been able to do what we said we were going to do over the last 18 months, and we're continuing to be able to hit those milestones. So that's kind of the first results in this year's drilling program, and they're already looking very good. And then there was another hole in there that said one of the targets we want to test is to the south, which is called Estrella. We also want to test Piedra. These are potential additional porphyry centers or deposit centers that have never been drilled before. And the mineralization continues to look better and better and better as we go that direction, and we're starting to vector in. So we're excited. We already have an amazing project. We already have the ability to continue to move it forward. But I call it, we've got the ice cream. Let's put some chocolate on top, throw some nuts, throw some cherries, all the things that only make it a more and more exciting project that will be acquired one day. Very forward-looking statement on that one.
All right. Well, let's keep tabs on that. What's the next drilling update and milestone we can look forward to?
We continue to put out, we'll probably be, at least on a monthly basis, we'll have drill hole results. We used to just do one at a time. Now we're having to do more than one at one time. But we're driving towards a PEA. So there's that engineering style that will be coming out. And then the PEA will be huge, right? I don't want to get too far ahead of myself, but I'm obviously extremely excited because even at a marginal NPV to our underlying valuation is way higher than where we are today. We've already had performed extremely well over the last 6 months, but I think it's just the beginning. And then the other big one is we are going to see the first round of presidential elections in May. And I think people are seeing what's going on in Colombia. Pretty much all the candidates have come out and said, we are going to depend on mining for our future growth, right? In some cases, oil, gas, and coal exports are 50% of the country's exports. So we're either going to transition to others or we need other things to continue the growth, our economic growth. So that is playing out very well, right? And for us too, the ability to work with somebody who's looking at a fresh 4 years and the ability to have a project that goes, we have the potential to be able to build it during your term is also another reason why we're working on getting this PEA done around the same time as we're having a new president in the country. So all these things align.
Before we end off, I'm curious. We talked about the permitting times needing to be reduced. We talked about development times needing to be reduced. But overall, when we talk about getting a mine online as fast as possible for posterity reasons, what about the drilling process? Is there anything that can be done now, any new technology that companies like yourself can employ that would allow bigger intersects and I guess more samples to be studied at every single intersect, basically higher efficiency, and so we're reducing the discovery time? Is that something that the industry can work towards?
I think the big one is we need more investment, right? There's been a steady decline, and worse is that as money is being put in, there's less discoveries coming out on the other end, right? So we just haven't had any discoveries. There haven't been any big discoveries despite the amount of exploration, and exploration budgets have gone down. So you need to fill the very end of the pipeline, which is new projects, really needs to be done. So that's part of it. But we're even doing things. I think we use AI a lot as kind of a buzzword, but large language models are not going to make exploration faster, but machine learning definitely is, and we're already applying that. And normally that today helps in the interpretation of all the data that you're taking in. We are using directional drilling, which isn't the old stick a wedge and try and curve a drill hole. It is literally you can turn 45, 90 degrees if you need to be able to take some of these deeper holes and then really be able to bridge out in the lower sections instead of driving gigantic big holes from the surface to get the density you need in order to convert resources from an inferred to a measured and indicated. And we're also looking at some new technologies because Macoa is just one little piece. We're going to be testing 2 additional targets around it, but overall we have 1,300 kilometer land package that is underexplored. So looking at how can we efficiently look for the best targets within that area, and there's new technology in remote sensing geophysics. And then the nice thing is now the interpretation on the back end of that, there is some efficiency. And I know the big boys are putting big investments into that type of technology to speed up the discovery cycle because we need to do something, right? If you've looked at the curve of investment versus discoveries, there are all these big discoveries. There was even a time where the line went like this and the discovery line was still going like this. And line has come off and it's gone to trickle. And even worse, they're deeper and deeper and deeper. I mean, you look at Resolution, they finally did a land swap today, I think. But that's a project that's so deep, it will take 9 years if you started constructing it today to see copper at the other end. So that's another part of the problem with these timelines, is that as projects get deeper, they take longer to develop.
Fair enough. Okay, well, we'll put the link down below in the description so people can follow Copper Giant there and stay up to date on their latest news releases. Thank you so much for your time today, Ian. Welcome back to the show. It's good to see you. We'll have you back on again soon. Take care for now.
I hope we continue to have these conversations over the next decade.
Yeah, this is being a great partnership, and I appreciate you coming on. Lots to talk about in the copper space. So follow Ian, links down below, and don't forget to like and subscribe to this channel for more daily updates. See you next time.